This podcast is brought to you by Deepbridge Capital LLP. Deepbridge is authorised and regulated by the Financial Conduct Authority. Please note that investments discussed are both illiquid and high risk and won't be suitable for all investors and should be considered as part of a diversified portfolio. The content of this podcast should not be construed as financial or taxation advice. We recommend investors seek appropriate professional financial advice. Any views expressed may no longer be current and may have already been acted upon. Hi, I'm Andrew Aldridge.
And I'm Olivia Drinnan.
Welcome to this Deepbridge Discovery Podcast. In this podcast, we're delighted to be joined by Richard Martin, who's founder and CEO of Thinking Machine Systems, a portfolio company within the Deepbridge Technology Growth EIS Fund.
So hi, Richard. Just to start us basically, I thought it would just be better if you could just tell us a little bit about what Thinking Machine Systems do, and then we'll go from there.
Great. Well, thanks for the invitation. Excited to be here. I'm Richard, founder and CEO of Thinking Machine. We are an AI platform that helps procurement directors to automate analytics of their contracts and invoices across their technology suppliers. So using Thinking Machine, these procurement directors are able to gain better insight into these sources of complex spend and secure a continuous source of cost-saving initiatives.
Okay, brilliant. And how did Thinking Machine Systems come about? What was the kind of key problem you're looking to solve? Kind of just tell us a bit about the genesis moment.
Sure. Well, my background is in the telecom industry. So I spent over 10 years working in the telecom industry in Australia, hence the accent. Although you probably couldn't
It's not
tell.
a Scottish accent, definitely.
It's not a Scottish accent. It's not very Australian either. But there you go. So working on the supply side in Australia, I was very hands-on in the operations of enterprise contracts and billing processes. So, started out basically answering customer service inquiries, why is my bill a certain way that it is? And eventually I was managing a team of consultants that were providing a managed service out to our largest enterprises. So, high street banks, airlines, etc. And what I learned while I was there was that, despite the resources and investment that was going into getting the bills accurate, it just never happened. The contracts and the bills were far too complicated. We had stories of, major, red alert alarms of billing problems that couldn't be resolved after many years. We would throw teams of 100 people to work through it all and solve it all. And in the end, we really achieved nothing better than just, kind of sweeping it under the rug and really not putting in place long-standing fixes. So it was at that moment I realized that, there was really a good opportunity here that if we could take a data-driven way to accurately understanding contracts and invoices together, then that would be transformative, on all sides of the supply chain.
So you're like one of those examples of employees that has to deal with a problem every day and eventually thinks, do you know what, I'm just going to start my own business and solve this problem, which I think a lot of employees can relate to, but very little of them actually have the cojones to do it. So I suppose my question was, what was your first step in starting the business?
Well, there was a few things involved there. I was fortunate around 2017, 2018, while I was still working at Telstra, did a bit of a remote stint, and story for another time, but I ended up at the Microsoft AI headquarters out of Seattle, and was able to see kind of like the front line of the AI research that was happening there out of Building 99, and that was inspiring. And it was there that I didn't really know what the idea was yet, but Thinking Machine, started to take root in my mind as something that could be something in the future. And when I first started to take my steps, it was just on the tail end of a regulatory project that I was running at Telstra. We had to start recognizing revenue based on individual customer contracts, so basically deaggregating the general ledger. An incredibly complex problem. I was a little bit burnt out by the end of that, and thinking to myself, if I'm putting in this much effort to do this, why don't I just do it for myself instead of doing it for somebody else?
Sure.
And so I was able to come to the UK and thought, let's go for it. So basically, as soon as I left Telstra, jumped on a plane, came over to the UK, and started figuring it out.
Brilliant.
Why the UK, just out of interest?
It was lucky in the sense that I originally did not know about the EIS scheme in the UK. It was actually because of my ancestry here. Fun fact, my great-grandfather was actually the civil engineer for Liverpool. He's actually credited with inventing the football net.
Okay.
Oh, wow.
That's niche, but interesting. Yeah.
That's
Andrew
very
is
niche.
very
Not something you think would have to be invented, right? Probably more impressive, he did the Merseyside Tunnel as well.
I don't know. Football nets. Let's go with football nets. Yeah,
let's go with football nets. So my background, so I was able to come to the UK very easily because of the ancestry visa, and thought, London's a, hotbed of activity. So, I thought something would arise there. And then after I came to the UK, I discovered the EIS scheme, which was just perfect, for us, because of course, when you're starting a startup, you hear all the horror stories about how, the cap table ends up looking, and all those terms get baked into the contracts. And the EIS scheme really seemed to avoid most of those problems.
Absolutely. I think it's certainly great from our perspective to hear how EIS is so impactful to bring companies to the UK. It's not just about turbocharging UK companies, but also attracting talent such as yourself and ideas and IP to the UK, which is great. So you've started the business. Kind of what successes have you had to date? What have been your key milestones? What's kind of got you excited so far? What's what are those key moments?
When we got started, we had this idea to automate contract and invoice analytics, but we were still pretty early on in terms of having the technology robust enough to scale. And so it's been a multi-year journey of, iterating over that, improving the technology, working with, kind of individual customers along the way, and then seeing that move up. Some of the main milestones that we've seen, we are just about to secure our patent for the key innovation that we made in terms of not just being able to extract data from contracts and invoices, but also how you're able to translate all of the jargon, all of the very different ways that different organizations in different countries describe, the same thing, and how we get that into some form of standard meaning, which can then go into our analytics layer. So, that was a key milestone for us, is to actually have something robust enough that we were able to go out and get that patent. We've been going from strength to strength, over the last 1 to 2 years now, commercially. We identified 42.9 million in savings for our customers in the last 12 months alone.
Cool.
We've just thinking there. I mean, really, a lot of that stems from from how we were able to find those savings. I mean, we've processed tens of thousands of invoices, thousands of pages of contracts. We actually got a great case study from one of our customers recently. We were able to displace Google as their document OCR provider. So our document extraction capability had gone that good that they were able to replace us within their supplier management portal. So this is a technology provider. They have a portal their customers drag and drop invoices to, and it's meant to automate extraction of data. They've been using Google's OCR to actually very poor quality results because of different languages, photocopied pages, things like that. And so we're actually able to show a 25% improvement in quality. And we're now, I think we processed 20,000 invoices for them last month alone.
I was going to say, sorry. Who's your ideal customer then? You talk about, kind of what you've been doing, but, don't necessarily need to name names, but in terms of what type of organizations are your ideal customer?
I was going to ask that anyway.
Okay. Great minds. Our ideal customer is procurement directors. So we do work in the procurement kind of ecosystem. So that's why, we were working with that technology provider. But our ideal customer profile is a procurement director, preferably a new procurement director who has that mandate for transformation. There's an interesting statistic that the average procurement director only lasts 1 to 2 years in their role, and 60% from there don't even make it to the 3-year mark.
So basically, if we've got any procurement directors listening to this, they should be worried. They should be sharpening up their CV. Is that what you're saying? Yeah.
Well,
Why
exactly.
is
I mean,
that?
sorry, Liv.
Sorry, I was just saying, why? Why is it such a short-lived career path potentially?
Well, there's so many data-related issues for procurement directors to actually have the ammunition they need to enact savings. So, Bain did a study a year or so ago that showed that mature procurement organizations actually saved on average 50% more than their less mature. And if you think procurement's main job is to save money, then if you're saving 50% less than your peers, you're probably not delivering to the plans that that you've signed up to. And procurement's a very interesting role. It's actually similar to what I had back in the telecom industry in that it's not meant to be, but it's a back office role. It doesn't really get all those same technology innovations that maybe the other departments do. And yet it's so important to get the data right, because if you don't know what you're spending money on, you don't know, kind of the key facts around those spending volumes and how you can negotiate savings, then you just, despite best efforts, you're just not going to really get anywhere. So going back to your question, our ideal customer profile, we're going after procurement directors who need this sort of tech to be able to make an impact in their role. So we're looking for procurement directors who are relatively new, have a mandate for transformation, kind of like a mid to large organization in the sense that they're not so large that there's layers upon layers of bureaucracy, but there's enough there that we can actually kind of, get things done relatively quickly. So we tend to find ourselves working with a lot of technology-based organizations. Yeah.
Cool. No, and a massive market to go up. Brilliant.
That's really interesting. No, I was just going to say, when you do go in and you speak to those procurement directors, what is that conversation like? Because I can imagine they might even be surprised at these savings that you've managed to find.
Well, for sure. I mean, there's different levels of understanding of what a good procurement organization actually looks like. And one of our challenges is, to bring to the table the additional data sources that they need to be able to achieve better results. So a good example of that is procurement's pretty used to dealing with spend data. And so what that looks like is you've got a finance system, invoice has already been paid, and it's just kind of recorded in a summarized line item. This supplier, that's how much you've paid, and then maybe a best guess over what they think that spend belongs to. What we're doing is we're saying, well, actually, why don't you give us access to the raw invoices themselves? So those, paper copies or PDF copies of invoices. We'll scan all of that into our system so that we're not just going to see, that you spend, 10,000 quid with BT, but we'll also be able to build out for you the inventory of the particular centers, the service numbers attached to that, really being able to get into the transactional detail of what that spend really means. And then it becomes a whole conversation of, well, what do you do? Because when you have this transactional data, maybe you didn't realize that there's all these additional transformation opportunities that you weren't even thinking about yet. And so that's an interesting conversation, because some procurement directors will be very open-minded for that sort of thing, and others will be more like, I have my way, you fit into my way, or not. And so that's, hence why we're generally looking for procurement directors who are relatively new in their role, because they're generally a bit more open-minded to go, I've just landed, I need to make this impact, help me.
Yeah, that's really interesting. It's kind of what we're looking for when we're choosing companies, early stage companies like yourselves to invest in. We need to have people that are really open-minded. I think there's definitely a generational shift in some senses. But I suppose we've talked a lot about the successes and the things that we've gone around. I suppose we've kind of touched on the challenges there in terms of you're engaging directly with the client. But what other challenges would you say that you've had on your journey so far?
Well, procurement's not an easy department to sell into. I mean, generally the usual role of procurement is to negotiate deals on behalf of somebody else in the business and to really hammer the supplier, make sure they're getting the best possible price, really, put the screws in. And so it's an interesting experience selling a tool that's actually made for them, because you get these very experienced negotiators who definitely know how to get the best out of you. On top of that, sourcing cycles are very long. And I think maybe this is a post-COVID effect as well, or maybe just with the way the market is right now. But we've seen sourcing cycles already very long for procurement get even longer. Typically it's 6 to 12 months, and we're seeing that extend in some cases to 12 to 18 plus.
Right.
And
is that COVID related, you think, or is that just because economic challenges over the last kind of 12, 18 months internationally, or is that just the way people work these days, things just take longer?
I think it's a combination of factors, definitely probably more economic than anything else, but I think people are a lot more careful now in the tools that they're acquiring. We even had one late stage opportunity that we have going at the moment. They said, we're so worried now about the vaporware effect. We've gotten a few technologies or softwares which are great, but we didn't do the right thing in terms of finding the right people in the business who are actually going to use it, and all these additional steps. And now it's just sitting on the shelf, not being used. And so now we've got these additional layers of processes that we're going through that are just naturally adding more time to that. So, it probably started post-COVID. Everyone's just being a little bit more cautious. Now economic, considerations as well. Definitely the economy is tougher than it was. I think there's a lot of uncertainty about the future, so people just want to get it right.
Yeah, makes sense. So we've kind of looked at your journey to date, but kind of what are the next steps? What are your next steps in commercializing and scaling the business? And what's the exciting bit? Looking forward is always the exciting bit.
Well, we've gotten the technology to a really good place now. In terms of the document extraction, the analytics, and how we deliver value. One thing that's been lacking is that we've got this great code base in the back end that really needed to be operated by an expert. So somebody who understands, all the different scenarios that can occur, and making sure that the code is working the right way. We've been working on structuring all of that so that even all those back-end processes are a very software-driven workflow. And then that will enable us to start opening up our platform to partners, to say consultancies who already do the sort of work for their customers, but maybe on a consultancy project basis. And then that will allow us to be able to step out a little bit from always providing, essentially a managed service in the back end to, you send the work to us, we'll get all that data processed and visualize it for you. Now we'll be able to then, start to sell to the big four consultancies of the world, or, even the smaller ones, and say, if you want to deliver an excellent result for your customers, then now you can use our software to be able to take you through all the steps of analyzing contracts and invoices. So that's a very interesting avenue for us to get into, because a lot of the enterprises we sell into already have established relationships with consultancies who kind of do similar work. There's at least an overlap there. So if we can start to align our technology with them, then that just, we see that as a great multiplier on how we're able to get our tech out into the market. So that will be completed. We're right at the tail end of that, so it's very exciting for mid-year release for us. And of course, just starting to scale on the go-to-market activities and starting to get out there more.
Brilliant.
Yeah, no, it's a really exciting next step. I suppose I was going to ask you maybe how Deepbridge would support you through that. But maybe before we speak about Deepbridge, I know we touched on earlier about Enterprise Investment Scheme funding. But why was it that you sought EIS funding in particular when you came to the UK?
Well, as I was mentioning before, I mean, I was very, very concerned about the horror stories that occur with VCs, probably the Silicon Valley archetype, where you sell for $1 billion and the founder walks away with $100, after all the preferential rights and layers upon layers of mechanisms that, you need a world-class lawyer to be able to decipher.
Absolutely.
And Before I identified EIS as being a relevant scheme, I was investing so much time reading every book I could, trying to, better understand the cap table better than your VC sort of thing. When I came across EIS, the theme that really resonated to me was that everyone needed to be on the same class of stock.
Yep.
So, yes, there may be some additional terms in there to make sure things are being governed in a particular way, but all in all, you're on, equal footing. And to me, that was that was the main reason why.
Yeah. And in terms of obviously then coming to the UK, you obviously said EIS was a key driver in that, but in terms of, if you like, being an interloper coming into the UK, how have you found the kind of the ecosystem, the support, for an early stage company as yourself, coming with fresh eyes to the UK, really kind of tell us a bit about your experience and kind of your opinions.
It worked out surprisingly well. From unexpected places. Obviously you do the flat share in London when you first arrive, and turns out my housemate was able to introduce me to a number of startup related. Being here, I'm already kind of hooked into the startup scene in Cambridge, already meeting various advisors. I don't even remember how, but I was introduced to who is still my current lawyer, Ed Sloan from Mills and Reeve.
Yep.
And they, it was through him that I ended up getting introduced to Deepbridge. So, without even necessarily actively looking for these things, there was a great ecosystem there, and dare I say, a lot more than I would have expected coming from Australia.
Yeah, and I guess now you're Edinburgh based as well, you'll start to see that the Scottish ecosystem and Edinburgh itself has a very strong ecosystem of support and opportunities. So hopefully you'll see that continuing as you continue your growth journey.
Absolutely.
Yeah, and I do agree, actually. Now I'm thinking about it, the UK, I think, does have a really strong network and a lot of opportunities, mainly through drinking culture, probably, to meet people and to network. So that's
right.
Really
that's
nice,
all right for Aussies. They can deal with that. That's fine.
Yeah, exactly.
Yeah.
We learn from you. Cool. So when you actually said, okay, fine, I'm going to go down the EIS route, you've kind of alluded to that there are criteria and things that you have to meet to qualify for EIS funding, but what was that process like for you?
Oh, very, very, very simple. And because we had gotten connected with our law firm that we're with, and they invested in us early on, which I guess is another aspect of the support network. Yeah. It meant that we were able to get all the support we needed to, meet the criteria, to make sure that we met the criteria for initially SCIS and then, of course, EIS. Very, very painless process.
Brilliant. And kind of what have you used your SCIS and EIS funding for to date? Kind of what's that money been involved in? Has it been hiring people? Has it been patent protection? Has it been kind of how's that been used?
Well, we've gone through a couple rounds now. So in 2021, we raised our initial round. That was really aimed at securing the technology, getting everything to the place that we're able to go for the patent, and then starting the process, at least, of commercializing the product, and really transforming it from just kind of a promising tech into a SaaS product. Since then, we've started raising a second round from Deepbridge, just at the start of this year, and so we've been investing on the security compliance. So we're getting our SOC 2 Type 1 report probably today. And then, unfortunately, Type 1's the easy one. And then we're going to be getting our Type 2 report 6 months from now, all going well, touch wood.
At least it's a tick on the journey. You're ticking things off, yeah.
Exactly.
What has your experience been like working with Deepbridge in particular?
Oh, fantastic. I mean, Deepbridge has been very, very supportive of giving us a space that we need to do what we need to do. But then also being able to swoop in and be protective, when there's been danger afoot. So, we had a lowball acquisition offer, not long ago that, for various reasons, they expected they would be able to get that. And Deepbridge were incredibly supportive of making sure that that didn't happen, but then at the same time being able to significantly improve the offer that was coming along. So while an acquisition ultimately didn't happen, we ended up in a far better position as a company than where we did. Which was appreciative because at the time our revenue numbers were a bit soft, and we've since tripled our MRR since then. So now we're in a much stronger position in no small part because of Deepbridge's support.
That's so interesting. Do you think that if Deepbridge hadn't sort of said, look, don't go for it, you might have seriously considered that offer?
It definitely could have happened. We had people internally who were like, man, maybe we should just go for it. Why not? Yeah. And there was definitely different sides of the camp that said, well, no, let's push on, and others that said, oh, well, maybe let's just, it's not a bad number, it's good enough. Why don't we just do that? And because of Deepbridge being as supportive as they were, it made it easy to be able to push on and get to where we were.
Somebody said to me last year, I was talking to a founder, and they said a good VC should be like a big brother. They shouldn't be like a mother. They shouldn't be over consuming and all over you. They should be like a big brother to put the arm around you when you need to, and also kind of sometimes just to show the way forward. And but ultimately let the VC, let the founders get on with it. But so I quite like that analogy. So it sounds like that was kind of a similar kind of to what you experienced there, which is great.
Exactly.
It's really interesting as well. I think that you don't really think of these problems until you're speaking directly to a founder. Like for you personally, that must have been quite a stressful decision to make and to kind of stick with your guns. Obviously, it's paid off now. But I'd be interested to hear from your perspective how that was.
Oh, yeah. I mean, I think the NVIDIA CEO made a statement a little while ago as part of some interview. The interviewer asked something to the effect of, how would you do it differently if you did it all again? And his response was, if I knew what I knew now, I would not have done this startup at all.
I think that's a key theme we often hear. Absolutely. But you, so I guess, following on from that then, are you enjoying it? Are you enjoying the ride to date?
It's one of those things. It's you definitely love the journey, and it's something that I've gotten a lot of satisfaction out of, and especially with where things are going, very exciting. You just can't get over the fact that it's an incredible amount of work, and there are a lot of sacrifices that come in. So if you are properly informed at the start, it doesn't look like a very good trade.
Absolutely. Maybe we should keep it a secret. We shouldn't tell founders what
we'll
they're
cut this
for.
bit out.
No, brilliant.
No, it's really, and kudos to you for keeping going, because it is obviously an ongoing challenge, but you've obviously got, I think you've got, from just meeting you for this podcast, the right temperament for it, but obviously the drive as well, which is really important to us as a fund manager to identify. I suppose, what are your hopes for the future would be my next question.
Well, I mean, 100x revenue, all of those things.
In the next 6 months, yeah?
Yeah, exactly right. You should have seen my original business plan.
We've seen so many of those.
It is actually interesting that in 2019, when I first started this, I had a vision for a different market than where we ultimately ended up, which was the telecom expense management market. Obviously coming from telecom, and this TEM industry is actually very well established, ripe for disruption. And we made a bit of a go at it in the early days, and basically we didn't have the size to properly go after it, and we didn't want to become an overly invested company going down that route. So ultimately, I think it then led us to bigger and better things because of the procurement focus and the push to innovation that brought on us. But interestingly enough, we're making a lot more inroads into the US now, and a lot of partners who are starting to adopt our technology are telecom agencies who perform these one-off audits of contracts and invoices to give to their customers. Funnily enough, this theme of disrupting the TEM market has come up again, and suddenly this network of partners that we've created over in the States are all of a sudden saying, we've got access to all of these enterprises who all need a new and better 10 platform. Could you be that for us?
So it's kind of almost circular. It's come round to that point, but you're in a much stronger position now to go after that market.
Exactly right. And so now we're in a position where we still very much identify with ourselves as being a procure tech platform, but at the same time, we've now got this new market opening up for us that potentially has incredible scaling potential in terms of revenue, because we've done the hard work. We've got the distribution network down now, all these partners who already have all these trusted relationships with their clients. And so potentially a way of fast tracking, a number of the challenges that you face when you're on the outside trying to push in.
And I guess from your perspective, you've been in the States, you've seen how not only how companies work, but how individuals work, etc. So having just that kind of understanding of behavior and decision-making processes, it must be kind of almost second nature to you to be able to see that and kind of deal with a different environment.
Yeah, exactly right. So it's been a very very well-rounding experience over the last few years, getting the technology better, getting far more capable in terms of the go-to-market motions, and then, as you say, full circle coming back.
Brilliant. So we've got one last question for you, Richard. The question that on our podcast, everyone hates us for asking, but we ask it anyway. It's our favourite bit. The Deepbridge dinner party. If you could invite 3 guests to the Deepbridge dinner party, dead or alive, but not family or friends, because we don't want to offend anybody, who would they be and why?
Glad I had time to think about that question. I would not have done well on the spot. So if I had 3, there would be, I think the first one would be Richard Feynman. So he's the famous physicist, and if you've ever read his books, he's a incredible storyteller, and also has an incredible way to break down very complex concepts into simple bite-sized pieces. So I think that would be a fascinating person to have there.
Absolutely.
Kind of in the same vein is a physicist called Max Tegmark. And if you haven't read his books, he's got this amazing book he wrote 7 years ago called Life 3.0, and it's all about the new world with AI. When AIs actually do reach that general intelligence threshold. And that actually shaped my thinking very early on from years ago. Mm-hmm. So he's also got this other book, Our Mathematical Universe. He runs through the entire tree of mathematics in a very simple and digestible way. So brilliant.
And is it less scary, his views on the world with AI than Mad Max or anything like that? Is that, kind of, yeah.
Well, sadly, all he can really offer are scenarios.
Yeah.
So he opens the book with this very optimistic, positive scenario that makes you go, yeah, that could really work well. And then kind of all goes downhill from there.
Fair enough. So, okay. Yep. Okay. Thanks for that. Anyway, keep it light. Yeah. Yeah. And your third one, Richard.
And the third one, I think, would be Satya Nadella, the all-star CEO for Microsoft, because he's obviously the man in charge right now, isn't he?
Yep, absolutely. Can open some doors for you.
Very themed dinner, this. I can imagine exactly. I wouldn't understand half of the conversation going on at this table.
The joy of Feynman is that he takes complex physics things and almost puts it into storytelling and almost kind of breaks it down into analogies that you can understand. No, you would, absolutely.
A dummy's guide.
I can't say I've read his books, but I've read bits of Feynman, so that's
Great. Well, I think that's everything.
Yeah.
So just to say thank you very much for joining on. It's been really interesting. And appreciate your time today, Richard.
Thank you very much. Really good to see you, Richard.
No worries at all. Thanks, Andrew. Thanks, Liv.
Thank you for joining us.
If you have any topics you like covering in future Deepbridge Discovery podcasts, please email us at discovery@deepbridgecapital.com. We look forward to seeing you soon. This podcast was brought to you by Deepbridge Capital LLP. Deepbridge is authorised and regulated by the Financial Conduct Authority. Please note that investments discussed are both illiquid and high risk and won't be suitable for all investors and should be considered as part of a diversified portfolio. The content of this podcast should not be construed as financial or taxation advice. We recommend investors seek appropriate professional financial advice. Any views expressed may no longer be current and may have already been acted upon.